Welcome back. Now, the recovery seen in business confidence since the first half of 2024 came to a halt in the first quarter of this year and has since dwindled. According to the BER Business Confidence Index, morale dropped by 5 points to 40 in the second quarter, remaining well below the 50-point neutral mark, with only one of the 5 sectors surveyed hitting that mark. Keabetswe Mojapelo, macroeconomist at RMB, joins us for a closer look at the data and what it suggests for morale moving forward. Keabetswe, thanks so much for your time this afternoon. So as mentioned, following that upbeat momentum we saw last year, it seems like sentiment is plateauing. In the first quarter, morale remained unchanged. In the second quarter, we're seeing take a knock. Just take us through the reasoning behind this dip that we are seeing.
Yeah, as you mentioned. So, the business confidence stalled at 45 in the first quarter. It's now slipped to 40 in the second quarter. 4 out of the 10 respondents basically seeing current environment as satisfied. So the majority are still really under pressure.
Mm-hmm.
And when you look at when the survey was conducted, so that really matters for what we got in terms of the respondents, is between the 7th and the 26th of May. And a lot of the respondents came in a bit early.
Okay.
So this is the time now where there was a lot of tense diplomatic relations with the US. And also, despite the fact that we had the pause in the reciprocal tariffs, there was also the uncertainty around the budget.
Mm-hmm.
And then you also look at the fact that domestically, that uncertainty then led to a lot of uncertainties around political stability. We still also have persistent logistical constraints. So that still weighs heavily on business. And this is what business leaders really related in this slip in confidence. Looking at the sectors, 4 out of 5 sectors were basically just in decline, just without the whole trade sector. So this is similar to what we saw in the first quarter. Only one sector did the heavy lifting.
And what fueled that sector in particular? It was the wholesale traders, right, that reported a positive showing. What fueled sentiment on that front?
So if you look at the retail side of things, there's still really optimism around this pickup in consumption.
Mm-hmm.
If you look at inflation at the moment, quite low, this supports real income. If you look at monetary policy, though we did see a pause, we resumed with a 25 basis point cut. Unclear for the next meeting, but we still see, as a house, another 25 basis points. That's going to now lower borrowing costs and also debt service costs for households and still lead to more spending. But you also do have some injection that will still come through from a two-pot perspective. It hasn't ended. It will continue into this year. So there's still that optimism around the retail side of things, especially with whole traders now basically reflecting this.
And it's interesting to see what's playing out when it comes to building contractors, because on one hand, we talk about interest rates and low inflation boosting the consumption side of things. But on the other side, it doesn't seem to be enough for the residential property sector.
No, you're quite right. So if you look at the construction sector, they have yet really to feel the impact or the positives coming from the interest rate cuts. And even the current 25 might not be enough. But if you look at the construction sector itself, it has been mired by a lot of problems. GDP numbers really reflect that quite a lot. It's been in contraction for almost last year, and also it was in contraction this past quarter. Now, what are the problems there? Lack of investment or low investment. There's been a lot of uncertainty. So the time to buy assets, sort of housing, and also do a lot of construction, it's not really something that happens in this period. There's a stalling in investment in uncertain periods. Then the other thing, we do know that there's that element within the construction sector that's around the criminality that has held back the sector itself for quite a while. So it's also reflecting those kind of sentiments from the respondents.
And what are we seeing playing out in the manufacturing side of things, Keabetswe? I mean, when you also look at other hard data like manufacturing output, we see that coming in low. I think that was one, yes, it was one of the sectors that weighed on GDP in the first quarter. You also look at those ABSA PMI numbers, also not positive, and I guess that also playing out in sentiment.
Yeah, no, you're quite right. So you look at the manufacturing sector, they have basically said the same thing within that PMI number. And what is really worrying manufacturers? You look at it, domestic, we still have uncertainties. Global, you still have uncertainties. And what has that done? The IMF has revised global growth down. So you have lower global growth. That means from an external sector, that demand is lower. Now you have also our own GDP, which slowed quite considerably. If you looked at yesterday's numbers, domestic demand is also quite slowed down. And then you also look at the fact that they have always been lamenting the persistent logistical constraints.
Yes.
Now, this is coming through not only in PMI, it's coming through in the business confidence, even worse here, where really manufacturers are seeing a hard time.
And just looking ahead then, Keabetswe, taking in consideration the hard data that we are seeing as well, we are also seeing some stability when it comes to the GNU with the budget being tabled. We do now know that VAT has been scrapped. There has been funds allocated to Operation Vulindlela, particularly when it comes to infrastructure spending. Does this bode well for business confidence moving forward, or are those risks just still too high?
Well, you mentioned it right now. We have now this fading domestic uncertainty around budget. Now, that's a good thing. But when you look at globally, it's still a bit foggy. We're still approaching that July 9th, which is essentially the end of the reciprocal trade pause. No one knows what will happen. So it then still says there's still global uncertainty. But we're also seeing some sort of upside ourselves from a consumption perspective. Should we get the interest rate cuts that will then fuel our customers or consumers going back to the stores? And then you find some confidence from retailers and wholesalers. But overall, long term, in terms of growth, we have always known that we have structural issues that are holding us back. And with Operation Vulindlela, as you mentioned, that is going to unlock a lot of these bottlenecks that we face as an economy. So at the moment, long-term growth, what we really need is that implementation, the execution of Operation Vulindlela to be as effective as it can be so that we are able to unlock growth. The BER has mentioned that you have a potential of about a 3.5% growth should you just implement these reforms quicker. So all that now matters is the execution of Operation Vulindlela and structural reforms. You'll see growth lift up again. And confidence, more importantly, coming back to the fray.
All right, Keabetswe, thanks so much for your time and sharing those insights. We're crossing fingers and toes that the structural reforms really do take effect so we can reach growth of 3.5%. That's something we only dream of. Thanks so much for your time yet again. That was macroeconomist at RMB, Keabetswe Mojapelo.